Thanks for joining us today. I'm Deborah Morton with Clario Real Estate, and I'm so glad to introduce Cale
Orge with Supreme Lending.
and Luke
And I'm Luke Hale, also Supreme Lending.
and
Morgan Elise, Clario Real Estate.
we are here today to talk about mortgages, financing, and the real estate world. In the Atlanta metro area, there's information that you need to know. So, you were saying we're at a 17-year high.
17-year high on the 10-year Treasury. Yeah. So
So,
The
how does
question
that
is-
translate to what
the
regular
question is
people?
like, why, right? Because again, if the Fed is saying, hey, watch this, this, and this, right? And this, and this would be consumer price index, which is basically what is a consumer willing to pay for something, right? Then the producer's price index, what does it cost to build something? And then the jobs market, all those things are trending down, which is what we want to see. Meaning it's cheaper to buy stuff, it's cheaper to build stuff. Unemployment's actually going up. So that's a good thing, right? Because if unemployment goes up, that means that wages, there's not a pressure to give people higher wages, which just makes inflation go up. Because when we get money, what do we do with it?
Spend it.
We spend it, right?
Right.
Which doesn't help inflation at all.
Right.
So it's like, why are these things going down? Why are they trending in the right direction? But then why is the 10-year Treasury going up? Like, it just doesn't make sense. The only explanation is to say that, well, if home prices is the key driver in inflation right now, then they're just making a very bullish move to stop inflation by having the interest rates held
Using the
artificially
housing
high.
industry
Yeah,
to
When
do
the
that.
cost of money is higher, people spend less.
yeah.
And that's what we're seeing.
So we've got all the demographics here in Atlanta. You know,
Yeah.
we've got employment, jobs, we've got people. And when the market goes up and we're seeing, you know, the right house in the right area priced right still goes above list price.
It does with multiple offers.
For sure. So you look at that and you say, well, how, like, even though rates are going up, the market's still doing this. That's why the Fed is trying very hard, attacking our industry specifically to get on top of inflation, because our industry is that one that's still being very picky.
It does feel like we're being attacked.
So you have like an insider knowledge to where a standard customer has no idea what's going on. Because like on social media, Zillow, Realtor, or any internet website, like we have no idea what all of that means.
Right.
So why should someone, I don't want to say why should someone talk to you. When is the best time someone should talk to you?
Immediately.
Okay.
You know, it's like, when's the best time to have a conversation with your doctor? It was yesterday. You know, that's like you start feeling sick, like you needed to talk yesterday, but we always kick the can down the road. So
For good health, you should speak to your mortgage lender
Exactly.
early.
yeah, because we say that all the time. Like, we're doing surgery on your finances. We kind of use that term a lot, and we're getting uncomfortable with your finances. So if you want to put together a realistic game plan, and you want to look towards the future, which the future may be this weekend, right? It may be 2 or 3 weeks out, a month out. If you have the right expectation of what to expect, that purchasing process is so much more enjoyable. And you set the right expectation, and you're not showing someone a house at $700,000 and they fall in love with it just to find out they can only afford $400,000, or they want to spend $400,000.
We just left a buyer consultation and basically had that exact conversation, is what you qualify for and what you're willing to spend. You got to figure that out, because it has to be comfortable. Otherwise, we're going to be looking at houses and going backwards.
Yeah.
The houses are never as nice.
It's hard to undo that, right?
Yeah.
And so to your question, when do you want to talk? You want to talk at the beginning of the process for more than one reason. Because sometimes people are pleasantly surprised at what we tell them, the information we're giving them, right? And we say it all the time, knowledge is power. So the more information you have, the more you can go at it from a strategic standpoint, the more good information you have, you're just able to make a good decision. Because if you listen to all the fluff out here, well, I'm not going to buy it because the housing market's going to crash. Well, then you're just going to sit on the sideline and waste valuable time, right? But if you get out there and you've got the information in front of you, then you can make the educated decision. The answer is either yes or no. And some people, the answer is no. You don't want to buy right now. For the people, yes. Like, when has real estate ever been a bad investment, right? It's not. You just, can you hold on to it through some of these low periods, and then it comes back? If you bought in 2019, how happy were you that you bought in 2019?
And frankly, I bought in 2007. That would have been when it was not a
Not to
good
buy.
time to buy. But I am so far recovered at this point.
Absolutely.
You're a genius for
and
buying in 2007.
Right. Right. And maybe in 2010, 11, I didn't feel like a genius, but it was the right house that suited my family, the space we needed, right schools, right location, right neighborhood. And now I've got sitting on plenty of equity.
Yeah, and what we do on our end when we're talking to your clients is the answer is budget, right? People say all the time, should I buy now? Like how many realtors are making a video right now says, this is the great time to buy a house. According to realtors, it's never a bad time to buy a house, right? Everybody has the video, but if you can give the why, then you have legitimacy behind your video, which again, if you have a budget and you can afford the house, rates are gonna change. They're gonna do whatever they wanna do. We can control that anyway. So go ahead and buy the house. And that's what we work on, Luke and I, is working really on budget and what do people wanna spend? And then we turn them over to people like you to say, all right, go find the house and here's the budget. You make it happen. And that was a great buy when they bought it. And in 5, 10 years, 7 years when they go to sell, it's gonna be a great buy then.
So Morgan and Luke are helping a lot of first-time buyers.
Yeah.
So that budget conversation, we're gonna speak in a different language than y'all are gonna speak. Sum that up. How are you gonna talk to people who are living at their parents' house and prepping them or renting? Like, what does that look like?
It's a great question.
I think the biggest thing, just from what I've seen, is people are so concerned about just their credit score. So I tell them, so some of my friends are currently renting, and I tell them like, hey, like you should go talk to some lenders, get pre-qualified, just see where
Not just some lenders.
Yes.
The best
yes,
lenders.
The best lenders. See Supreme Lending. Yeah, see Supreme Lending. Just to have that conversation, explore your options, see what you're qualified for, and they get caught up on their credit score isn't good enough. They have a rent until 3 more months or 2 more months, and then they're going to renew their lease, and just little things like that.
So you're hearing younger people
Are worried about credit.
and maybe the process that they're unfamiliar with isn't suiting them. So how would you address that?
And with credit, this is why it's especially important to meet with the lender as early as possible, because then you have more time while maybe you are living with your parents or you're renting to work on your credit. That's something that we actually, Cal and I, prioritize is we'll look into your credit, whether it be a soft pull or what have you, just to be able to have a glimpse into your credit profile. And then we can devise a game plan and a strategy to work on their credit, improve it to where it needs to be, so that by the time you're ready to buy, maybe your credit's good enough to qualify, or maybe it's even better than you thought it might have been, and that makes pricing even better. The higher your credit score is, the more affordable the process is.
So if your credit score is 800,
You're gonna have the best pricing.
Woo!
In fact, 780 is the best pricing. But let's say, usually when people wanna really consider their credit or think about it, is if they're at a 600 or below, because then it's, can I buy, can I not buy? There's also a situation where if your credit's maybe at 700, great credit score. But if there's a way to bump it up to 740, 760, 780, the pricing is going to improve and it's going to be a more affordable process, which especially important for first-time home buyers.
that's good information. So a lot of times people think, oh, my credit's not good, but they don't really, based on what? Like, are they pulling Credit Karma? Right.
Yeah.
So having a conversation, it's a soft pull, and even if they're not in above 600 at this point because of lack of credit, you can give them a game plan for getting there.
Yep.
And that, I think, is the key for helping people, is giving them a plan to get where they need to go. That whole clear path thing.
Your path to success. Clario Real Estate.
Clario. The signs are everywhere, right?
Yes,
It's a beautiful
there's literally signs
I know.
everywhere.
Yeah. Credit is a big one though. And again, it's when you don't know and you don't have the information, then there's a lot to be nervous about. But when you start shining lights on things, you realize, well, really not that bad. It's not that big of a deal, because most of the clients that we talk to, if they are in a position where credit's bad, you're talking in a 30, 45-day window, you can clean that up pretty darn good, right? So if you have 3 more months remaining on your lease, why would you not take advantage of the 3 months to fix your credit? And like Luke said, get it as high as possible, because the higher it is, the more doors that are opening up. And affordability is everything right now. People are not going to buy because in their mind they think, I can't afford it.
And when they think I can't afford it, other than credit, what else are they telling you I can't afford? Or what is the conversation you're having with potential first-time buyers? It's that we can help people. How much is a down payment?
Yeah.
That's what I'm seeing is I don't think I have enough money saved up for down payment and closing costs. There's ways to get around that. As the lender, we can, investigate and really provide a clear financial picture. Maybe it's a gift fund from a family member. I see that a lot with first-time home buyers, more than you probably would think. A family member wants to help out and contribute, especially because home prices are where they are. There's also down payment assistance opportunities where, we have a in-house product called Supreme Dream. It helps pay the down payment, so they don't have to bring that. All they have to do is bring the closing costs, which are negotiable with the seller. So maybe it's a situation where the seller then helps out.
That's on us.
Yep, exactly.
We handle that part.
Yep. Y'all's expertise.
I think it's also a lot of times people hear down payment and it's immediate panic and they're like, oh, down payment's like what, 50%, 30% of the sales price, and it's 3 to 5% instead of half. I don't know. I think that whole jump scare.
Well, that's what I was going to say is if you have a parent who's trying their very best to help you out, my parents are in their 60s, right? So almost in their 70s, truth be told. But, when they bought their first house, it was like 20% down.
Right.
That's just the deal. So if you're passing on that information and you're a 25, 30-year-old person who's looking to buy their first house and you automatically just think, I don't have 20% down. House is $400, I don't have 80 grand. You know what I mean? That's where that misconception comes from. So most people say, well, Luke, I can't go conventional because I don't have 20% down. And like you said, if you're a first-time home buyer, it's 3% down. All of a sudden, things become much more attainable the more information you get.
So when you talk about gift funds from a family member, is it possible for somebody, let's say you have parents who are maybe in their 50s, 60s, 70s, whatever age, they have a lot of equity in their house, they don't have any intention of moving, plus they have retirement savings. Do the gift funds have to come from their checking account?
Not necessarily. No, there's myriad opportunities where that can come from. It can come from retirement. It can come from the equity in their home if they want to use that and have access to it. They can pull that out and that can be used for a gift fund. Really the only, block on it is you can't use financed money for the gift fund. So it can't come from a loan per se.
Right. I can't borrow money to gift
Exactly.
to my child to buy a house.
But if it's your own equity or your own funds, absolutely.
So if I wanted to get an equity line of credit on my home to gift money for her down payment, that would work.
That would work. And you have cash to be able to give to them in the form of a gift fund.
Because I'm not moving, and
Exactly.
she's gonna pay me back at some point, even though that's.
Don't tell us that.
But I mean, there's a lot of options. So if there is somebody out there who is paying too much in rent, they know what their budget is, and it's just the down payment part that is problematic. There's ways to get through that when you have a good conversation.
Absolutely. And you bring up rent payment. If you look at the nation, why does the nation watch Atlanta housing right now? It's because the way that the rent and the mortgage payments are so closely linked together. So we're one of those cities where it's like if you can afford the rent, you can afford to buy. It's not like rent is $1,000 cheaper than a home payment, right? They're so closely tied together that most of the time we're telling people, you're paying $1,800 a month in rent. You could easily buy a house. Let's get the down payment and the cash to close figured out. Let's get creative however we need to. And then you could be a homeowner. There's no more time wasting and just burning money on rent payment.
And also, I did talk to a bunch of my friends that are currently renting. The thing about mortgages that scare them is they're used to the 20-year, 30-year loans. Instead, you don't have to do a 30-year loan.
30-year loan's best though, right?
Depends what you want and need. A 30-year is going to be the cheapest monthly payment option because it is, so long. So, the payment increments, that amount's going to be smaller. 15-year, if you want to pay it off quicker, that's a good option. But for a first-time home buyer, they might want to have the smallest payment possible, in which case a 30-year is usually the ticket.
I did. I took a 30-year loan when I bought my house, but I added additional principal payments every month, and I pulled up an amortization schedule, just a chart of how much extra to pay, and I got my house down to a 10-year mortgage just by paying extra on the principal. And qualified mortgage professionals can step everybody through that.
Absolutely.
But you have to have the conversation.
Yeah.
Yes, I think the initial thing is just having the conversation, just weighing your options. That's like the first step.